Hi, folks, and welcome to the Trade Exchange. From the analyst desk, we wanted to spend some time on option activity, option basics, whether it's from subscribers or folks that DM us and inquire about specific options. We've been in capital markets for the better part of 20 years, and certainly options make up a really significant part of a trader's day-to-day information stockpile, if you will. And that's one of the many reasons that we provide option information on a consistent basis, no matter the market. So we'll jump right into certain just basics information of options. So if you're familiar with the Trade Exchange, what we do, we provide a lot of information for the capital market community. Traders, active traders across capital markets, whether they're equity specific or stock specific, whether they get involved in actually trading options, or perhaps they just monitor option activity for their own benefit. So a lot of information coming out from the Trade Exchange, as you see here, in terms of the type of streamlined information and how we deliver this information. And so taking a look at where the information is disseminated, you'll see here is from in the Trade Exchange forum, Squawk Audio, and Market Streamer feed. So let's jump right into what are the basics of options. So an option is the right to buy or sell the stock. So what happens is, so equate this to one contract equals 100 shares of stock. So you want to look at time to expiration. You want to look at the strike. Is it in the money, out of the money, at the money? A lot of times you hear these conversations of, it's deep out of the money option. Is it in the, in the money? We'll show you some examples down the line. So really the basics, what traders take a look at, they look at the break even. They look at the price of the underlying stock. They look at what's the directional bias of a particular transaction. So what does this mean? And we'll get into this in a moment. If you're purchasing calls or purchasing puts, if you're purchasing calls, obviously it's bullish. Purchasing calls, is bullish. Purchasing puts are bearish. Again, we'll get into that. The amount of equivalent shares. So for example, as we talked about, one share or one contract of an option is equivalent to 100 shares. That's what you get with that particular contract. And what's the dollar amount of the transaction? And even more important is all of these combined. And in addition to that is, what is the open interest compared to the transaction volume? So when we get into call activity, we look at whether it's on the offer or ask, or whether it's on the bid side. And why? As we said, if you're purchasing calls on the offer or ask, it tends to be, the sentiment is bullish. If you're selling calls or on the bid side, sentiment tends to be bearish. We want to look at expiration. Is it a weekly expiration? We'll get into that in a moment. Is it a monthly? Is it, remember, there's weekly expirations, there are monthly expirations, and it's leaps. Leaps are over a year in expiration. You think to yourself, well, why would somebody buy that? Well, there are many reasons for buying super short-term or selling super short-term options, monthly, and even leaps. Maybe the pricing of a particular option is so attractive for the long term that traders are having a difficult time passing that up. Taking a look at your same thing on the put activity. When you're purchasing puts on the offer or ask, is a bearish sentiment, and you're on the put bid side is a bullish sentiment. So again, it's a reversal of the call activity. And again, same thing. When we see activity in weekly, in monthly, in leaps, what does all that mean? Meaning, what does it mean for the underlying security, in volume and price action? We'll get into that in just a moment. So let's take a look at some examples. So let's say we're purchasing 1,000 contracts of any stock XXX. Well, obviously it's not a symbol, but for example, for our purposes, September 100 calls at $1. So what does this mean? So when, if particular situation, let's say XXX stock is trading at $90, the break even in this particular situation would be $101, where the stock needs to trade for the trader to break even on trade based on the underlying stock. So let's say the trader is purchasing these particular contracts at $1, and he's anticipating it's a bullish sentiment, meaning he's buying calls on the offer. He's anticipating, the trader is anticipating the stock going above 100, but he needs to go to 101 in order to break even on that $1 contract. So it is, again, bullish sentiment. The value of the transaction is 100,000. Why? We take 1,000 multiplied by 100. Remember, one contract equals 100 shares, and you multiply that by the cost of the contract. So in this case, 1,000 contracts times 100 is 100,000 times $1. So it becomes the value of the transactions becomes $1,000. So if somebody put a $1,000 bet that stock will go above $101, and it's a bullish sentiment. Okay, and in this case, yes, it is September, so it's a few months away. It's not specific weekly, but again, we can take a look at the put side of things. Purchasing 1,000 contracts at $1, September 100 calls. We're assuming that the stock is trading above $100 because the strike price is 100. The break even is 99 because they're paying $1. It needs to go below $99 to actually be profitable, to break even on that particular trade. And it's a bearish sentiment. So the person is purchasing the right to sell the stock at $100, and the trader is paying a $100 premium for that. And again, the value of that transaction is $100. Again, it's in this case, it's still September, and so it's a few months out, assuming we're just getting into the end of June. So what are we looking at? We're also looking at selling or bid side. We mentioned that option transactions kind of reverse of what folks typically see when they're purchasing options on the offer. So when you're selling or the bid side of the calls, you have a bearish sentiment. Are there any conditions to these particular selling of calls? Meaning, does the person own the underlying security and they're selling calls, so it's a buy right? What's the transactional value? Also, same thing on the selling or bid side of the puts. It tends to be a bullish sentiment. Are there any other conditions? What's the transaction value on that? Again, those are very interesting to take a look at. We'll take a look at some most recent examples. Also, whenever we see specific option activity, we want to see any coinciding volume and price action in the underlying security, whether it's in the short term or in the longer term. Also want to bring up the weekly options. We mentioned this earlier. What's the short-term expectation of the trader? Is there an event upcoming? Is it earnings season? Is the company reporting in the next day or two? Maybe it's a Wednesday and we're seeing call activity on the offer for that particular Friday expiration. And that's something really important. How volatile is the underlying security? Is it a very short-term bounce back or short-term short play in the underlying security. Again, that's something to keep in mind. Keep in mind expiration. Remember, weekly activity can be a month out in a particular weekly expiration. Again, very important to keep an eye on. So we want to see coinciding volume. We want to see activity in the underlying securities. These are some of the most recent examples. Last week, for example, we saw in the morning CY July 11 call activity, 12,000 contracts at 20 cents on the offer. So again, you're taking 12,000 contracts times 100 multiplied by 20 cents on the offer. It's a bullish sentiment, but again, very interesting, the amount of contracts that we see in there. A little bit later in the day, we saw AKS Steel. AKS January 5 call activity over 3,500 contracts at 93 cents on the bid side. What does that mean? It's a bearish sentiment. Remember, selling calls on the bid is a bearish sentiment. And we see 3,500 contracts, 93 cents. So someone going out into January is putting out an assumption that the stock will be below $5, and they're selling it. Well, excuse me. Whoever is purchasing that particular call activity is assuming it's going to be above $5. But if you're selling into that, you're actually bearish. So you don't believe that will be above $5. So you're selling 93 cents. You're receiving 93 cents in premium per contract. Also, a day before that, we saw PAY July 19 call activity over 5,000 contracts. There was very interesting Vodafone activity. We like to see that. We like to see if there are other news. We'd like to see if there are other information coming out that would substantiate more call activity or put activity in the underlying security. Again, that's a great point there with respect to options. And folks, we are everywhere. We're on obviously on the web at TradeXchange.com. We have a mobile app, just highlighting that here, and you do get notifications. We're on Android, Google Play. Google Play. We're soon to be on iOS. And folks, we are working on the options feed, dedicated options information for our subscribers. So folks, keep us on your list. If you're not yet a subscriber, we're having a great promotion starting very, very soon. Definitely follow us on Twitter for more information. Reach out to us directly at 203-939-1250 at thetradexchange.com. Folks, thanks for tuning in. It's been an absolute pleasure, and we look to providing more information about options, insider transactions, company filings, so much great information coming through the Trade Exchange, and our objective is just to make your trading day that much better and easier, and for you to really stay informed. Folks, thanks for checking in. This has been the Trade Exchange Analyst Desk. We are built for traders by traders.